You're listening to Don't Waste Water.
AG Wave has a change in investment preferences, so not only care about financial return but also about the impact. I think that's pretty good and that's going to change the industry.
Hello, bonjour, and welcome to the Don't Waste Water podcast.
I think something people, investors definitely don't realize is how whole economy is working because we have a steady supply of water.
I'm your host, Antoine Walter, and in today's episode, I'm happy to welcome back Nicola Ravello as my guest.
If you're used to unlimited and free supply of water, and you don't even realize it's part of your business model because for forever you're like, I'm just going to take the water from the lake. And now if there is a drought and there's no water available, then you start realizing, oh, okay, it's like, yeah, we need to do something about that.
Nicola is the founder of Stag Investing and the author of a book called Stories in Water Sustainability and Investing.
Once investors and asset managers and economic decision makers know the real value of water, they're going to change their decision about water and they're going to start preserving it. So it's really using market forces to value water.
Stag Investing is a research platform for responsible investments, focusing on sustainability as a source of value and stability in the long term. Water could be anecdotal in an investment strategy. After all, as a sector, it weighs less than 1% of the world's GDP, so at first sight, it sounds like a topic for the most convinced impact investors only. Yet, on the second look, water is on the critical path for many other sectors. Indeed, which industry can boast of being able to run without water? Which building can deem to be entirely safe from any flooding or extreme climate event? And that still totally skips all the sectors that rely on water's quality for the finished good. All of a sudden, water becomes much less anecdotal. It rather becomes a direct and indirect economic risk. And this turns it, as a matter of fact, into an interesting field to investigate for investors, analysts, and asset managers. Now, if we look at the other side of that same coin, there's a great opportunity for the water industry to understand the implications of that economic story, because that's what differentiates between water and wastewater treatment being a cost to be in business and the same players being solution providers that secure a sector's future. Shall we explore it? Well, while you buckle up, let me remind you that if you like what you hear, you can help me up tremendously by sharing that content around you. So please tell your friends, colleagues, or LinkedIn network what you learned or found inspiring in what Nicola shares today. And if you don't like what you hear, please reach out to me and tell me what I should be doing differently or better. Come on, do it, and I'll meet you on the other side.
You're listening to Don't Waste Water, the podcast that helps water professionals to improve their wastewater treatment, optimize their operation costs, and keep up with the latest market trends. This podcast is brought to you by GF Piping Systems. As a leading supplier of piping systems made of plastics and metal, GF Piping Systems is the global expert for the safe and reliable transportation of water, chemicals, and gas. For more information, visit gfps.com.
Hi, Nicola.
Hi,
Welcome
Antoine.
back to the show.
Thank you very much. Thank you for the invitation.
So you're one of these twice guests on that podcast.
Yes.
There's only one ahead of you. It's Ravello, who was there three
Okay.
times. So now you have
Okay,
some
cool.
pressure.
Yeah, sure. I can come back next year too, yeah.
I'll recap a bit what we discussed
Sure,
last
yeah.
time, but
Yeah.
just before, I'd like to open with our good tradition, which is the postcard.
Yeah.
And actually, we are sending a postcard together from Zurich because we
Yeah.
sit in one of these fancy places.
Yeah.
But what can you tell me about Zurich, which I would still ignore by now?
It's a very sunny day today. We got lucky. And we got super lucky, I would say, also over the winter to have a lot of sun.
So sunny Zurich,
Yeah.
that was our advice
Yeah,
as the
exactly.
tourism office.
Yeah. Now, but I would say that Zurich is really a city where it changes a lot by the season. Like in winter, everyone is a bit inside, having maybe a beer or a glass of wine inside. But as soon as the sun comes around, it's like the city flourishes like a flower. Like there's like terraces everywhere. You can go in the water. It's like there's a lot of life in it. Yeah.
There's a terrace here.
Yeah.
I was thinking maybe let's do it outside, but I think you already have some background now. It's from our place, so maybe
Yeah.
outside would have been a bit...
We can get a coffee afterwards.
So when we discussed roughly 1 year ago on that microphone, you showed us how finance could unlock something in the water sector, and I think that's quote unquote what you said. Finance can unlock something.
Mm-hmm.
And how that was good news, because there's this element of finance can be maybe something that people are afraid of. You explain how different investor profiles would see different appealing aspects in the scattered water industry, from the utility bedrock that makes for a safe bet for pension funds up to the dynamic startup scene that's attractive for venture capital. And you've told us how that made finance a kind of engineering space where investment research and consulting companies like Stag, your company, can build sustainable portfolios in all the exceptions of sustainability. So hopefully profitable, but also with a positive social and environmental impact. And you see how I put profitable first, which is already a question. Shall we put profitable first or the impact first?
I think it really depends what you want to do. I mean, if you're an investor, you want to make a change and an impact, then you can put the impact first. It really depends a bit of the owner of the capital and what he really wants to do. And you can be a family office that is a bit more conservative and just cares about the wealth of your family over time, and then you put like the financial first, but you can also have, maybe you want to have an impact on the side, you know. Pension funds, they need to care about the financial because otherwise they're not going to be able to pay the liabilities to people. But they still have a pressure from their constituents to have an impact. Yeah, I mean, it really depends of the capital owner and what you want to do. I mean, you can be like also a family office or a VC fund that really cares about solving water issues, and you go on the impact full on, yeah.
Actually, I warned you last time. I have to warn you again this time of the fact that I'm really a finance layman, and I'm happy being a finance layman. So I'm trying to simplify things that I get them.
I think that's perfect.
In that preparation, I was looking a bit how big is impact, how big is ESG and so far. And from what I found, ESG investments is about 15% of the investments worldwide, which would make about $35 trillion, if I'm right. And inside this ESG, 1% is impact. And that would make about $350 billion. I had the discussion with John Robinson on that microphone, and when I said that, he told me, no, that is an oversimplification. That's not how we would define the general pockets in the market. Would you agree with this?
I mean, I haven't looked at the latest numbers. I think it's roughly that, maybe a bit, it will say even a bit more actually, maybe 1.5 billion for impact and let's say 40% for ESG. But I think he's right in a sense that, I mean, ESG is a lot of different things. When you design your investment strategy and how do you want to integrate sustainability, there's 1,000 ways to do it. So you can either start with a basic screening methodology. You say, okay, we don't invest at all in guns, in oil and gas, in mining operation. That's one way to do it. Or you say, okay, we have an engagement methodology, so we engage with the oil and gas industry, trying to reduce their externalities, their methane pollutions, all the problem linked to fracking and everything. So you can also have an impact by engaging with your companies and saying you should not do that, do this. Or you can have like I would say a targeted approach where you say, okay, we really believe that climate change or the water crisis is a huge problem, and the solution for these problems are going to be needed and are going to be valuable in their own right, and you can just target the best solutions and create a portfolio out of this. So yeah, I mean, I would say the ESG wave it's quite massive, and I think it will take...
Talking of that ESG wave, because when we discussed 1 year ago, it was about, is there sufficient finance to feed the water industry? And we were saying, you were explaining that finance can unlock something, but we were also saying maybe finance is not yet to that point, and you're saying you have to evangelize and to keep explaining everyone. And now we have the
Did
ESG
I
wave. I don't think that
so.
was my oversimplification.
Yeah,
but
maybe. Yeah.
But when we see now the ESG wave, everybody keeps referring to nowadays. Do you think that went too far? And is it a bubble?
Well, I think I would say first that there's definitely a lot of interest from retail investors. So like you, me, and like personal, I mean, I would say not ultra wealthy people that really care about like sustainable challenges, like solving climate change, solving water. So there's definitely an interest for this, and also from some family offices or ultra high net worths or very rich families, they want to have an impact. And then it's like, how do you translate that in tangible products, genuine in financial products that does have an impact? And I think that's the whole deal now. So I would say the ESG wave has a change in investment preferences. So not only care about financial return, but also about the impact. I think that's pretty good, and that's going to change the industry, because now you design your investment strategy not only about risk and return, but on a third dimension. And then I think it's going to be a process of maybe going too far, going back, coming in. But at the end of the day, I think what matters is whether your investment strategy is legit. Like if you really have an investment process that cares about impact, that you do either an engagement methodology or you do a specific targeting of the best solution. There's also a dark side where a lot of asset managers use that as a tool to raise more assets or just surfing this greenwashing wave.
When you say investment methodology, ESG, really from my perspective, sounds sometimes a bit blurry. you can have your own definition of E, of S, of G, and then define it to be really green or really sustainable or really having an impact, when in fact, objectively, maybe it's not really the case.
100%,
so is there a structured way to build an ESG portfolio?
Yeah, I mean, I think that's the whole deal, this whole exercise. It's like rebuilding a car with a new, changing your gas engine to electric engine, you know. So somehow you have to remove the engine, you have to change all the things and put a new engine and make sure that everything still works. So you had an investment process where before, I don't know, you were caring about the volatility. We don't invest in stocks that are too risky or too volatile. We want a target return between, I don't know, 5 and 15, and that's it. Now you have like a third dimension. Like now we also want impact, or at least sustainable consideration. So kind of change the parameters in your modelization, in your analysis. So
yet, if I recall my discussion with Claudia Winkler and Alice Schmidt on that microphone, in their sustainability puzzle book, they explain how we have this Mickey Mouse thinking, where you have profit is the head of Mickey, and then you have environment and society, which are the ears of Mickey. So they exist, they are part of the assessments, but they are by far not central like profit would be.
Yeah, I mean that can be one way to approach it.
Well, I mean, that was the wrong approach, but the approach that too many people keep following.
Yeah, I think the financial is still the main consideration for a lot of investors. I wrote an article, I think 2 years ago, about why people care about sustainability. So I think that the first level is like, you see that as people care about sustainability. I can just put some words in my fact sheet that are sustainable, and I can raise assets from sustainable investors. So that's kind of like using sustainability as a marketing tool, even if you don't give a damn about it, and you say, I can increase my 10%. That's one way. I mean, that's like the greenwashing way. That comes at your own risk, because if you say that you do sustainability, then you don't, and then maybe those clients, they're going to come back, and then it's like reputation issue.
So kind of greenwashing at that stage.
Yeah. I mean, that's pure greenwashing, and some people can use it as a way to make money. But if you do that, there's going to be a risk. It's like being dishonest. Like, it's just simply not true. You have other investors that see sustainability more as a compliance. So they have the traditional financial investments. And now like they have this pressure from society or from the investors to care about sustainability. So they kind of see, we have to deal with sustainability. So how can we do that? So those kind of investors, usually they're going to rely on frameworks, on ratings in a way to justify their investment. So they do like simple screening. Okay, so we're just going to tick this box, and that's okay. Sustainability is dealt with, and that's really a compliance. Then you have more sophisticated investors that see that as a risk. Sustainable issues are changing the world and changing the economy, and if you don't take care of them, you might lose your investments. So you have to integrate those consideration in your risk management process. Then the two other layers is like they see that as an opportunity. So that's the other side of the risk discussion, and they see new opportunities investing in water tech, climate tech, or all the kind of solutions that are going to solve global issues. And I would say the last is people that really care about the impact, they invest for impact. And,
this third level of risk, I think, is the heart of your latest article. So I think it's also what I'd like to discuss with you.
100%, yeah.
Just before we go into that, in this ESG wave, I had Reinhard Hübner on that microphone explaining that, to quote him, not to change his word, there's too much stupid money chasing too few good targets. So that would mean ESG is full of investors looking for companies to invest in, and they're not that much good companies. Something which Christopher Gaston said in different words also on that microphone, when he said that we should not complain about the ESG wave at all, but we should make sure that there are projects for that money to be efficient.
100%. Yeah. I definitely think in the public equities, water funds like the likes of Pictet or Robeco Sam, when Pictet is managing almost 10 billion now in investing in water stocks, Robeco Sam 4 million, and there's been a lot of interest and a lot of money going there. I think there's definitely a lot of too much capital for the number of water companies there exist, and that's why I think a lot of them had a high valuation. But I think this is also due to the fact that you had a lot of liquidity on markets over the last 10 years from the quantitative easing from the central banks. So the central banks were putting a lot of money. They were like expanding the monetary mass in the market to support the economy and support job growth and support the whole economy going. And that's this kind of, if you expand the pool of money, you run the risk of inflation. And usually inflation is in the economy. But I think in the last 10 years, they were in asset prices. I mean, if you look at the market since the financial crisis, it was almost like this, almost like a straight line up. So I think the high valuation we see, at least in the public equity water market, is not because of the water, not only, but also because of market factor that valuation were in general high because there was a lot of liquidity in the market. So yeah, it's going to be interesting to see how it's going to develop now that the economic inflation is high, that probably banks going to start raising rates. So they're going to like pull back the money. So when there's less money in the economy, the valuation is going to go down because people just have less. So I think it's going to be interesting to see how things going to normalize. And I think that's also going to impact the private equity and the venture capital because there's also going to be less money. So the valuation will probably go down a bit. But that being said, I still think that the fundamental reason to invest in water is still here. We need those solutions. Climate change is going to aggravate the whole water crisis. We're going to need solutions to deal with water scarcity around the globe, with floods. And so that's not going away.
Actually, those are some of the risks which you list in your article. And your article is, if you read it, I mean, out of the blue, you just start reading your article and like, oh my God, water is really troublesome because there's the floods, there is the risk. If you don't have water, then your industry is down because it's on the critical path. And you list all those risks. And what is your intention with that? Is it to scare people and say, look, there's a big problem?
Yeah, I don't know if I'm meant to be a scarecrow. But I think something I was not seeing in the sustainable space or in the investment space, I think something people, investors definitely don't realize is how whole economy is working because we have a steady supply of water. I mean, I think that's the foundation of society. Since the last ice age, humanity can develop itself around the water lines, around rivers, around lakes, around freshwater sources. Slowly but surely, we built agriculture practice that was using this water. Then the water was used as a way for commerce. And in the last 200 years, it was used as an industrial input. I mean, you need water to factor medicines, drugs. You need water to create cement, for clothes, for pretty much anything, actually. And if you're used to unlimited and free supply of water, and you don't even realize it's part of your business model because for forever, it's like, I'm just going to take the water from the lake. And now if there is a drought and there's no water available, then you start realizing, oh, okay, it's like, yeah, we need to do something about that,
So you're saying that water has a huge value, which we don't realize because we have it. And it's this kind of thing which, if it vanishes and it disappears, then all of a sudden we're like, oh, that was really at the core of everything.
Yeah, I mean, I think most of the industrial business models in modern time, they rely on a free and steady supply of water, and this is going away. So if they don't do something about it, then you might find yourself in a tough position. And that's kind of what the message I wanted to get across, that pretty much all industries and all investments, I mean, the whole business and the whole valuation relies on this process to have a water to produce and to function. And if this water goes away, then your investment or your business is at risk.
And to whom do you want that message to come across?
I would say the entire financial community and the economic community. I mean, pretty much anyone, actually. I think it's really also part of...
Your primary target, it is really...
The primary target is really the asset managers, investors, and the financial community. And that's kind of, I would say, my way of having impact. If I can do my part in valuing water in financial market and in the economy, then the whole idea is that once investors and asset managers and economic decision makers know the real value of water, they're going to change their decision about water, and they're going to start preserving it. So it's really using market forces to value water, and once it's valued, we cannot pollute it, we cannot disregard it, then somehow the whole economic machine starts to protect it.
So an asset manager reads your article and reads one of the scary stories inside, like the semiconductors in Taiwan, all of a sudden no water, which means you stop producing because
because
there's no other way around. There's no water. And so how does he react to that? You say it will influence their ways to look at water, but in concrete step, will they... I mean, they are still asset managers. They are not people which are really dealing with the water. So it's really their money, which is going to... So it's an indirect impact.
Yeah, it is an indirect... I mean, my feelings at the moment is that it's the whole sustainability story. I think now there's a realization, financial system in the financial community, that sustainability, climate change, and the water crisis and biodiversity is important and defines the survivability of the economy. So I think there's this realization that without that, we don't have an economy, we don't have money. I mean, the survivability of an asset manager is dependent on nature keep on being healthy and working. But then it's a bit like a decision, like, should we change everything we've been doing to make it more sustainable now? Or should we wait a bit what the others are doing? And there's a bit like a process on. And I think there's also like some asset manager can stay invested in oil because I like to use a baseball analogy for this. Like, this is the last innings, the last 11 or 12, but there still can be a lot of activity there. And so I think some asset manager can start investing in new sustainable solution and be at the same time still being invested in oil and gas, because they can still make the last pocket of money that is exploitable in these things. So an asset manager can approach the transition, like the whole coming from a business as usual investment practice to a sustainable investment practice in a way that is not necessarily what would be ideal from a climate perspective.
So if you help them click and realize a bit earlier, you're shifting the timeline, because that's something they would have
I
done.
mean, that's really what I'm trying to do, and I think that's really what I see. It's really a switch, because I'm always trying to put water as a culprit. I don't know if it is the right word in English, as how the entire investment thesis relies on this. And once I make this case, people, it's really like a switch, and then they understand perfectly and they have an idea to where to start, what to do. And I think that's kind of all the articles I've been writing for the last year. It's about this. It's like Tesla that has been investing $5 billion in its Brandenburg factory, which is seen by most analysts as the way to dominate the European market, or at least grow its presence in the European market. But the reality is that the groundwater reserves in Brandenburg are going down. So Tesla got the license from the environmental office of the Brandenburg state, but the environmental office got sued by the local farmers and communities. And somehow now it's legal gridlock, and Tesla is stuck. So its entire success of its new investments depends on whether you're going to get water or not. I think,
which is a very, let's say funny, it's not the right term, but a funny story, because actually you can solve that in the case of Tesla, with creating the biggest atmospheric water generator ever, which is a story I like to cover on that podcast, which has a lot of ins and outs, but it sounds like you're just raising the financial bar of the value of water, and at a certain point it crosses the line of how much it costs to create water from air, and then you do water from air.
100%.
And it can sound like there's a solution to everything, and usually that's the way we treat desalination. I mean, you don't have water, just desalinate water, and there's oceans everywhere, so you find water. And on the other hand, it could be just shifting the problem, because what happens to the climate if all of a sudden you start to really use all the humidity to produce batteries? And nobody knows, and maybe nothing, but still nobody knows.
That's a great question. I mean, when I looked at the technology, that was one of my main concerns. You're still altering the water cycle in a way that is not known. I mean, you can do environmental modeling and reports to have an idea of what it's going to impact, but who knows? At the same way, it can also, water vapor is also a greenhouse gas. So
the strongest of all. So somehow
the strongest of all, exactly. So it can also be a way to work as a climate mitigator.
It's the greenest way. It's just we don't know.
Yeah, and I think we're really entering in an era where there's a lot of unknown, like many technology. I think I was also skeptical about all this carbon removal from the earth. Like, what happens when you start messing with the carbon cycles, the water? I'm not a climate scientist. I understood that so far that the carbon is like unified around the planet, so that's somewhat okay. But I think a lot of new technologies now is going to be at a planetary scale that's changed the planetary systems, and then sooner or later we're going to have to understand really how that works and make sure that we don't screw it up.
You say there are a lot of unknowns, and I think you're fully right with that. For a financial professional, that sounds like the worst which can happen, because if you have to make bets on the future and safe investments and everything, unknown and risk is not really what you have at the heart. And if you look at the pyramid we had last time, we were discussing with the bedrock, the people which are really looking for safe bets, and then on the top of that pyramid, the venture capitalists, which can absolutely deal with risk. It sounds like those guys are now in the middle of their environment everywhere, but the ones which are looking for very safe investment, what is safe in the new realm?
That's a great question. There's usually an analogy that when you build an investment portfolio or your bank account, you see that as a vault, that I'm just going to create something safe on the ground and with 1,000 walls, and that's safe. But if you build that and there's a flooding, and then maybe all your banknotes in the vault are getting water, then the whole reserve is gone. So I think a good analogy to see investments is also more about like building a ship, like you're building an investment process. It's like building a ship and trying to cross the Atlantic, like Vikings before or Europeans in the 16th, and see where that goes. But I think dealing with uncertainty and risk is probably the job of asset managers.
But when you look at I don't know how to call them, let's say the finance community, do you see many people which have the same approach than you, and which try to go to the bottom of things and to understand them, and hence have an informed view and know where to put their eggs and which baskets are the safest? Or do they rely on people like you to indicate them the trends and where are those baskets if they're maybe hidden from plain sight?
Yeah, I mean, that's really how I see my job, is being informing how the investment considerations are changing with climate change and the water scarcity issues and biodiversity. So then it's really up to every investor. Some, they don't really want to know, they don't care, and they're just going to invest their money. Others really see that as a risk or an opportunity, so they're going to change their decision. Okay, we're not going to invest in this anymore, but we're going to invest in that. No, I definitely see a lot of managers that sees sustainability as an opportunity now. I think the likes of BlackRock, the main ones, they understand, I think, that we need to change society now. I mean, the way it's built is not aligned with nature anymore, so that's not going to work. And in this change, it's like rebuilding society, you know. I mean, there's huge opportunity for people that can see that want to seize them. It's like rebuilding the entire infrastructure, the entire cities, the entire way the economy is built. And if you finance the right solution, then it's like.
But that starts with awareness.
Yeah,
and there's one quote from you, which you say that water represents less than 1% of GDP, yet it influences over 99% of GDP.
Yeah, 100%, yeah.
And once you've been looking at the water industry, at the water sector, or industry in general, and the role of water into, that's absolutely clear, and that sounds even obvious.
Yeah.
But you know, it's like the halo effect.
Yeah, 100%. Yeah.
Before you break the halo, you just don't realize it. And what is the level of awareness you see out there? When you say that, are people saying, oh God, we all know that? Or
on water, I see little, and that's my job actually. I see it's like really, I would say, an awareness and an education process by all the posts and articles I write on a daily basis. And I feel it's clicking in. So more and more, there's more and more engagement with my post and conversation that they understand. And that's what I'm trying to do always, is like going for this switch. It's like, look, I mean, we have an economy because we have a steady supply of water, and if that goes away, then it's like energy. Actually, is the same. I mean, if you're trying to run a business without electricity, I mean,
there were electrical blackouts, so people realized that. That's a bit the doom of the water sector, is that most of countries and most of places, except for the one which lived day zero, or the one which really, like Taiwan, had to shut down their semiconductor industry, they just never had the problem. And probably when you have the problem, it's already too late. So you have to react before. Yeah,
and that makes the risks more pernicious. I mean, as you said, in electricity, when there was a blackout, you understand that we need a reliable source of energy. But in water, it's more like, I mean, that's a good question now. Like, how do you invest going forward based on water and climate risks that you don't really know? I mean, you can read the IPCC report. They say they have several levels of confidence. Like, floods are going to increase by this, droughts are going to be increased by that. But you don't really have. I mean, you're in engineering. Like, how do you plan this kind of water resilience going forward? There's a lot of. You can say, maybe we wait another 3, 4, or 5 years, see how it happens. So should we go with a big buffer? Should we aim for like 4 degrees world and build like strong resilience thing, or is something in between? And I think that's not an easy decision. No?
Absolutely. I mean, in the engineering world, there's a bit this element of, historically our infrastructure was built on probability. Like, there's 1 out of 1,000 chances or risks that this happens, and hence we build our dams, the full hydraulic infrastructure on that. And now we have a shift. The shift means that probably the events are going to be bigger, but we don't have data. So it's like, let's take a guesstimate, and let's say we redimension everything, because we still have to have this 1 out of 1,000 probability, because people won't accept to be flooded every second year. But we just don't have data. We know something is shifting, but we don't have that historical track record anymore when we can really build upon it. And that is challenging, because that is...
Yeah, I mean, I think you understand it well. It's like you build your infrastructure based on a set of probabilities. So you create a buffer for the uncertainty. Now these probabilities are changing, but you don't know how they're changing and how much. So the buffer, you need to adjust the buffer, and it's tough. I think it's going to be a decision going forward, like how much you invest for this buffer, how much the buffer should be now to account for climate change. We didn't have like this blackout that put the awareness on the map, but I think now it's a couple of examples that happened, like with Tesla or with other.
Actually, the interesting thing is that probably if you look at the risk side of things, the blackout wouldn't be the biggest risk. That's my very subjective feeling. Because if you don't have water, yes, everything is stopped. But as soon as you can find a new source of water, and we are very imaginative, you'll find you correct the thing. But the other extreme, which we've seen in Europe not that far ago, and in the US not that far ago as well, is when you have all of a sudden far too much water. I mean, floods. I mean, all these climatic events, which we all feel we will see them more, but react to those is much more difficult, because you cannot just press a button and have less and have a technology which just vaporizes that and sends it back to the atmosphere. Reverse atmospheric water generation, like cloud generation.
No, you need to build new resilient infrastructure, like either pumps to storm. I mean, there's a whole entire stormwater infrastructure
absolutely
that has to be built.
In terms of capital, that's a fully different scale.
I
mean, when you're building something to desalinate a bit more water or get atmospheric water generation, it has a fixed cost which you can calculate and estimate, and it's going to be in use. And on the other hand, flood prevention is something which is very capital intensive and might be absolutely not used for 10 or 20 years.
Yeah, exactly. But if you didn't do it and in 25 years there's a massive flood and you're on the water. So.
But this assessing the financial, I mean, the risk and financial link is absolutely clear, because you have to be, I mean, that's money you're just going to invest in some concrete, in some stones, and once it's there, it's blocked for centuries. So that is a difficult equation to solve on the financial side.
But I think the first step is really to get that awareness. If I can aim for this and succeed, that's really, I think, a big step. And that's also the whole process of valuing water, whether too much or too little. And
in your article, you have that quote, which is that carbon is not all of the story in sustainability, and water has a direct and material impact on businesses, bottom lines, and therefore your investment strategy. And you think that water will become a new standard of ESG integration going forward as institutions grasp with the physical reality of climate change. Which is exactly what we discussed. But I have now a very broad question. Sorry for that.
Please do.
But how?
I would say, how not?
That was an easy one.
Look, I think most of the sustainability discussion and the ESG discussion was axed around carbon so far, because I mean, we need to mitigate emissions, otherwise climate change is going to keep on increasing and getting worse. So I think carbon is the whole climate mitigation story. At the same time, we're already at a point that is we already suffering, or we already have to deal with the effect of climate change so far. And that's going to be the adaptation story. And I think that the adaptation story is going to be based around water, because most of the effect of climate change are somewhat linked to either too much or too little water. So droughts, storms, sea level rise. Climate change is disturbing the water cycles, so disturb the water security we have, and then we need to rebuild the infrastructure and the solution to make sure that.
But how do you build an indicator for that, for water inside an ESG framework?
That's a great question. And that was one of my work within a private bank last year, is like, how do you go from an investment process that is business as usual, so like traditional, to one that cares about climate and water risk? So my idea was like, okay, you look where you invested the most, and you have tools in the industry to tell you what are the water risks, how important they are to a given industry, and then you can use that to start modifying your investment process. So my idea was like, okay, we look at the industry that are most at risk with water. That can be oil and gas for the availability of water to frack, and mining a lot. I mean, mining needs the water to mine as well. So you're dependent on the water supply. But you can have issues with water pollution, with putting all the chemicals you use for mining down by the river. But you're also vulnerable to floods. So if there's a big flood, then your mine is underwater, and it's also a problem. So my work was really to redesign the investment process by creating an engagement methodology. So let's say we have all of our investments, and we're going to start engaging with all the companies and the industries that have the higher water risk. And said, okay, you go to them and you say, I mean, are you aware of this first? Are you aware that you're vulnerable to floods and droughts? If not, you try to make them aware. If they don't want to get aware, then you start an escalation process. You engage with the management. If the management doesn't want to engage, then you go with the board. And if they don't want, then you just, okay, let's let it fly. And then you can start designing a new engagement process whereby you ask your companies, your investments to take water risk assessments, trying to start estimating those risks. And if they're really vulnerable, you start defining KPIs. Like, okay, let's say you invested in a beverage company, 3 or 4 factories are at high risk. What can you do to mitigate those risks? So you can invest in your water recycling, water treatment, or on-site solutions that gonna reduce the risk of these companies. And slowly but surely, you start doing this with all your investments. First, taking a risk assessment, then defining KPIs for improvement, monitoring the improvement until they have an acceptable, let's say, risk-return profile, and then you start screening off the bad ones, and the ones that don't want to cooperate. Yeah.
When you say risk assessment, it's like evaluating the cost of inaction. What happens with the status quo? What would be the consequences of not doing anything? And that gives you a first cost.
Yeah.
And then you have the remediation possibilities. And if the remediation possibilities are lower in cost than your cost of inaction, then it's a no-brainer.
I would say even before you have tools like the WF water risk filter, where companies can put their assets into the tool and get a report of what kind of water risks they are vulnerable to. You get a first assessment. Okay, this factory in Mexico is extremely vulnerable to drought, pollution, and flood is okay. And then you get a first risk assessment. So you have a target, you have an idea of which water risk are at play. And then you can start measuring it. Okay, how much costs the water treatment or the water efficiency measure to mitigate this? And what would be the cost of not having water in a given year or second year? And then you can stack the whole financial calculation. Yeah. And
so that tool that you've developed for that private bank, I guess, is something which is then proprietary to them.
Yeah.
So is it that kind of approach that you have with all those players to help them map out and design their tools?
Exactly. That's kind of my job, and in a way, I think that's what I find fascinating, is designing investment process methodologies whereby you integrate sustainability and not just the entire way you allocate resources, you allocate money. So, yeah.
That's one part of your job. There's another part of your job, which is probably the most visible part of your job, is that I mentioned your articles are usually very detailed, so it's almost a book chapter. And actually you went that extra step because you've been, since the last time we discussed, you've been writing a book, and if I'm right, you're crowdfunding for a second book. So how's that part of your ecosystem?
Well, look, I started my company 3 years ago and starting to look at water from a finance perspective 3 years ago. And my process was really, I would say, explorative. When I quit my job 3 years ago in the finance industry, I really took the time to understand what I really wanted to do, and I looked for the SDGs for inspiration. So how can I contribute to a bigger goal? And for me, it was pretty clear at the beginning that water was linked to all of the SDGs. That's if you don't have water right, nothing is right. So for me, I saw that really as a way to have a great impact. And then it was really an explorative process, to start, what is going on in the water world? So starting to connect with as many water professional or investment professional as I could, start reading as much as I could on every book, every research piece, every article around water, and then starting to form my own opinion. And I was doing that by writing on LinkedIn pretty much every day for 2 years now.
It's kind of built in public.
Exactly, yeah. Yeah, it's a bit that, yeah. And slowly but surely, I kind of build up my own literature, my own database of articles, of resources. And recently I've packaged this as all my best LinkedIn article into a book, which I can sell on my website. What I'm trying to write about is really how the economy is changing with all climate change and water scarcity, and what's the new status quo, basically. And from all my LinkedIn posts were a bit like of a small bit of the puzzle here and there of what I see, and I'm trying to work on this
build
mosaic,
the jigsaw,
build the entire jigsaw, the entire mosaic. And my book was a bit of a collection of the pieces of the puzzle, not really in a structured way because I don't see the whole thing yet. But then my bigger article is really trying to build on different subjects in water, and until I can cover everything. So
is it possible to cover everything?
Well, I'll try. I'll try, but I find it fascinating. You have so much going on in water. I started with the public equity funds, where there's a lot of interest, there's a lot of capital going there, and then I went into the stocks themselves, the companies, what were they offering, how that was working, then the VC, private equity. You have a lot of different topics, and you have water microfinance with water.org, which I think is fascinating. How they managed to create a blended finance structure to attract private capital to finance water security around the developing world. Then you have also initiative like Blue Peace. I don't know if you know about, where it's an initiative of the Swiss government to invest in water infrastructure in developing countries in a way to secure peace. So the idea is that there might be war because of the lack of water. So if you invest in water infrastructure, then the reason for war is going away. So somehow you can invest in peace by investing in water infrastructure, which I think is a great idea.
That's a very interesting question, because sometimes I wonder if having a water tropism isn't influencing the way we look at the word, and maybe sometimes a bit distorting the word, because I've seen Michael Stanley-Geisdorfer, and I think you yourself as well, discussing on how it's going to be difficult as a topic, but everything happening in Ukraine right now is linked to water. How Ukraine cutting the water to Crimea, which have been taken over by Russia in 2014, was the root cause. And I have no clue if it's just an example. What I'm wondering here is that we have this lens of looking at water with this. Water is less than 1% of GDP, influences the other 99%. So if you look at water, probably you see the truth. And I'm just wondering, isn't that sometimes a bit too extreme to say water is all and everything can be linked back to water? It's a tricky question. Sorry.
I don't know. I don't know what to tell you actually. But I think that's the truth. I mean, I think all species as a human, as a species, is here on this planet because of water. I mean, we made mostly about water. Civilization developed so well from the last ice age because we had a lot of fresh water from the melting of the last glacier. So I think our entire story is based on water. And if you look at all the indigenous or all the culture around the world, the origin stories is always about water. So I think whether from a physical, scientific, or even from a cultural or spiritual way, I mean, we are water. I think that's not too much of a stretch to state that.
Let me save you from my tricky sidetrack.
Yeah, sure.
Let's come back. I was wondering, we discussed so far how the finance people shall look at water and how that shall influence the way they invest, they build their portfolios and everything.
Yeah.
I'm wondering now, if you look at the other side of the story, if you're a water company and you need some capital to thrive in the future, how do you have to shape and adapt yourself to be attractive for investors?
That's a great question. Well, I mean, I would first say that with climate change and the ongoing water scarcity, water crisis, I mean, the water companies are going to be the one that deal with these issues. So I think the number of problems are going to go up, and the water companies are going to be responsible for that. So I think there's going to be definitely enough business for them and interest to stay active. I mean, I think that's the whole value proposition to invest in water companies, because they're going to stay in business throughout climate change and deal with everything. So they're always going to be active and generate profit. So that's, in some sense, this is a long-term security for investors.
But on the other side of that same coin, it's sometimes, if you look at the pitches of any water company, it's like, look, we are saving the world, hence we are selling activated carbon. And people will start get pissed from the activated carbon industry, because I always take that example. I have nothing against activated carbon. It's just like, to me, an example of how it's hard sometimes to connect things. 785 people don't have access to clean water. My technology is fantastic. And in between, there's no direct link. So I'm wondering if those arguments are attractive enough for financial people, or if sometimes they want to have a bit more meat on the bone, which will force the water companies to be a bit more practical about saying, there's that problem and we solve for that problem, like really, not just with words.
Eventually, you have to prove that you're solving an issue. Otherwise, you just err. If you just pretend to do something over and over and then you don't do it, then, I mean, the job of financial people is to do this investment due diligence to see if we give this money to this person, he's going to do what he says he's going to do. Otherwise, you're just throwing money out of the window. So I think being honest about what your core mission is and your core values and what you intend to do and do it, that's the best way to attract long-term capital, you know. Then it's the whole deal of finance, is trying to make some room in all the what you hear every day and in the news to see if it's true. So, I mean, I think having a good business, be sure about what you do and do it well. I think that's the best. That's the best you can do.
You mentioned you created White Stag 3 years ago.
Yeah.
How did the landscape evolve over these 3 years?
I would say that sustainability has definitely gone mainstream. When I started, it was still, I would say, a fringe of finance. Like, oh, that's good, yeah, let's do that on the side. But it really got big quite fast, actually. I was a bit surprised, and how I was, for me, when I started, I said, okay, maybe I'm going to be in the fringe of the discussion for maybe 5 or 6 years. But I mean, after 1 or 2 years, I mean, the whole sustainability story almost now every asset manager puts sustainability in its front page. That's been the discussion at the moment. So I would say that really sustainability has become the hottest topic now, the thing to be dealt with. But then it's like, how do you do it right now? And that's the whole deal.
So that's looking in the mirror.
Yeah.
Now if I look in the crystal ball,
Yeah.
what do you intend to achieve over the next 5-10 years?
And for me, it's really what I really like to do is designing investment process, investment funds, portfolio constructions. As I said, I'm really seeing it as an engineering exercise. How can you design a structure that pull resources from one place to where it needs to go to create something? So whether that could be helping a VC private equity fund to select companies, or having an investment process in there through public equity funds, and also designing their portfolio construction strategy. So
is it natural for those players to seek help externally?
No, that's something quite new, I would say. I mean, usually a lot of people do something in-house, but I see a lot of new asset managers that are more interesting to work with external specialists and do joint venture and going that way. So I think that's also changing in the industry, yeah, for sure.
Because for them it's going to be hard to have a subject matter expert like you are in-house.
Yeah.
But not all of their investment will be water related, so maybe they don't need you for the full portfolio, but for a section of it.
That's usually how I try to work. Like if I can help on a given project, maybe designing methodology or designing an investment process, and then also supporting the implementation. I build something, and then maybe I go away, and then maybe I come back to build something else. Yeah. It's really how I work. Yeah.
You escaped my question on your second book.
Yeah.
Is it still an active project? Because you have so many things ongoing, I guess.
I mean, I have pretty much an idea of everything I want to write. So I'm really dedicating one chapter to one type of investment. So I started with public equities, then with companies, stocks, then startups and VC, and now with risk in the broader economy. And then I also want to write about microfinance, about the blue piece, and also water bonds. So yeah, there's a lot of things I want to say. And I think somehow it's all going to come up into one book, yeah. The goal, what I really want to show is how can you invest in water, and not in the community itself, but all the infrastructure to secure water. And how is that an investment for the future? Because, I mean, we need this to adapt our societies to climate change, yeah.
I had some weeks ago a discussion on that microphone with Katrina Donaghy from Civic Ledger to discuss their rollout of Water Ledger in Australia and all the applications of cryptocurrencies and blockchain to the water sector. Yeah. And if I recall right, the first person ever to mention the combination of water and blockchain to me was you.
Oh, yeah?
Is it still something which you're involved with?
No, not really. I mean, I followed I don't remember the name of the company.
Civic Ledger.
Civic Ledger, yeah.
Yep.
I think that's interesting. I think the use of blockchain for designing marketplace and using the token technology, a way to provide security and transparency in marketplace, I think that's a good idea. I think when we had the last interview, I just saw that and I think it was interesting, but I'm not involved in any capacity yet on such a tech, yeah.
Because what I'm trying to do with those interviews is always to try to connect the dots. Yeah, it's a bit like what you do with your building public with the LinkedIn post, which is a bit. Every time I uncover a little portion, and sometimes I get some links,
and then you try to see how this connects to your previous post, and how it's really, for me, it's really trying to put the pieces of the bigger picture and see how everything goes together.
You mentioned microcredits, and I don't know if you read the book of Gary White and Matt Damon, The Worth of Water.
I didn't read the book, but I've read everything they're doing. Yeah.
But they explain how water credits, so they're microcredit products, performs with 99% return on the loans, and how it's allowed to bring so many people out of water poverty, water-induced poverty. Yeah. And I was just wondering if there could be a connection between decentralized finance, which could be cryptocurrencies, which could be blockchain, which could be something more traditional, and microcredits, where they struggle to find an investment fund and tell them, instead of putting 5 billion or 5 million tickets inside a company, you'll have to put several 10 or 20. I think the average ticket for water credit is around $350. And it's hard to go to an investment fund and say, look, you have to make tickets of $350. But if you go to decentralized finance, maybe that's an option. I don't want to open a full sidetrack, because if not, I have to block you for 1 more hour. But just from the top of your...
Yeah, it looks interesting. The way water.org and Water Equity, the asset management works, is that they provide loans to local banks. So they have maybe in their portfolio, they have maybe 12 loans, 12 big loans. And with the condition that these banks provide these microcredits. So there's also this intermediation in between. And I mean, you could use a technology, a blockchain technology there. I mean, What I really like about blockchain in general is really the transparency and the security you get. For example, I'm also involved in oceans a lot, and for me, for example, seafood is a great place, is a great industry where blockchain can really provide something, because with the blockchain, the tokenization, you can really improve the traceability of your product through the supply chain. And that's something that is really an issue in the seafood sector, because like 25% of the fish that is sold is mislabeled. So 1 out of 4 fish, you don't even know if it's really...
One fish is the right fish or the other.
And it's the same with algae as well. And algae have very specific properties in cosmetics, in health. And so you need to know exactly which species it is. So with the help of the blockchain technology, you can secure the information from where it was harvested, what time, what species it is, and keep this information accurate throughout the supply chain. So for me, blockchain infrastructure as a digital infrastructure of your business is really interesting for sectors and industry that lacks transparency, I would say, and also efficiency and security. Yeah.
It would be another deep dive, but
I'll come back next year.
Exactly. You said you would be coming back next year, so I think maybe we
sure.
open the door, which we can follow on next year.
Yeah.
Well, Nicola, it's been a pleasure to have this deep dive with you on the finance side of things and on everything you do within that word. I propose you to switch to rapid fire question to round it off.
Go ahead.
It's time for the rapid fire questions.
Since the last time, some of them changed, but I'm not sure if all of them changed. So let's see if your answers are the same. My first question is, what is the most exciting project you've been working on and why?
I had many projects really interesting. But I'd said like the one I discussed before, like for this private bank of redesigning their entire investment process based around water. I mean, that was really interesting because it was really a top-down big strategy. I mean, it's like redesigning the strategy of the bank.
Can you give a name and say it's UBS?
Probably was prefer not, but...
Don't go into my tricks.
Yeah. No, I mean, it's really interesting when you start redesigning entire processes. I guess for you, it's the same if you could build your own wastewater treatment plan. So it's pretty exciting if you can do it the way you want. And
I think it's a good analogy because it's really, you have one output, one outcome, and you have so many different ways to go from one to the others, and you have to define which one is the right one.
And you have to redesign it in a way that is to a changed environment. So you need to account to new issues, new problems, new parameters, and to make sure that this new project is going to survive the new status quo. That's pretty exciting.
Can you name one thing that you've learned the hard way?
I would say I think nothing is given. You always have to push for more and stay relevant and stay up, because the projects are not going to come to you. I think you also know that. And so stay connected, stay on the top of your competences and your knowledge, and trying to see where you can contribute.
Is there something you are doing today in your job that you will not be doing in 10 years?
I don't know. Like, I also have a friend that has started his own consulting business at the same time as me, and he's more into the corporate consulting. So he advises companies how to integrate sustainability. I'm more on the finance side. And we always talk between us, like we always exchange. And he has more taken a way of like building his own company. He already has hired for people, and is really building his new consulting firm. And for me, I'm more like, I don't really want to build a company. I mean, I don't really want to be a manager of 5 things. I really like what I do, so I kind of see more myself as an independent consultant, like a carpenter. Like maybe I'm gonna have an intern and I'm getting some sort of mentorship going on there. But I don't see myself like, I really like what I do, so I don't see myself outsourcing. Maybe like reviewing the typos in the language of the documents.
What is the trend to watch out for in the water sector?
It's a good question. That's a good question. I mean, for me, the bigger picture is how water is going to become more part of the climate sustainable discussions, because I think eventually it will be one of the main, as big as carbon now. But that's a bit of a long term. And I think the valuation part is interesting as well, because since the market condition is going to change, the liquidity is going to be probably withdrawn from the central banks. How this is going to affect valuation and how this is going to affect financing. That's going to be interesting.
I cannot avoid that sidetrack,
sorry.
sorry.
Yeah, go for it. I know, I see you want it.
Have you followed the story of the natural asset companies, which the Dow Jones is putting in place together, I think, with the Rockefeller Foundation?
Okay.
So you could be putting on the market one of the nature services. The idea being that the first industry there is in the world is nature, by far bigger than anything else, because it's providing services.
100%.
And if you can put a value on that, you can raise money to go together with this value, and that money that you raise will allow you to preserve these assets of nature.
Yeah.
And then it's not something like you can invest in a natural park and then exit from it. Exit won't happen.
Yeah.
But if you do the right preservation move, then the natural asset company will have a raise in valuation, and then you can...
I mean, I didn't know this particularly. I'm going to look it up. But I think it's the same story for carbon credits. Like if a forest or a park or marine park can get some financing by issuing carbon credits from the forest it has, then it can use this financing to preserve its own park. I think that's a great tool.
And that brings the liquidity which you were mentioning.
That provides the cash and liquidity for the park to just conserve. I mean, to patrol. If it's a marine park, you need to constant patrolling. I mean, also not normal park in Africa. I mean, poaching is such a big issue that even if you have laws, you need to spend a lot of money on patrolling. But it can also be. I mean, you need to be careful with this because it can also backfire. I mean, I've seen stories where some farmers in UK or some park developers were squeezed out because suddenly this forest has generate cash flows, and then some banks or asset managers want to buy them to have access to these money streams, and they might not have the desire to protect or put this cash flow into forest protection. So
it's always hard to walk that very fine line. I already told that story on that microphone, but I was giving a conference in a university in France, and at the end of the conference, not the students but a lot of the professors just stood up and said, you're supporting the capitalist devil, and you should not mix water, sustainability, environment on one hand, and finance, money, and investment on the other hand. Those two words should be excluded one from the other.
Well, I think it's the whole discussion is sustainability. I mean, I think capitalism as a system of society for the last 250 years or so was working really well until it met planetary boundaries. I mean, it was working well for fringe of the population. You all have a lot of social issues underneath of that needs to be fixed as well. But now it's how do you adapt the system? Should we just forgo all finance? I mean, is that even possible? Can we switch from this to another system? Or you try to find concrete and some solution on the spot. So those carbon credits, they might be some greenwashing, there might be some bullshit, but they also can bring money on the table to finance the conservation of the park. So
mixed feeling as a summary.
I mean, I think I see it's like any tool. I mean, you can build
it's about what you do about it.
What's what you do about it, I think that's the bottom line,
Let me bring you back on track.
Yeah, sure.
And sorry for the sidetrack. I couldn't resist.
I like it.
If you were a world political leader, what would be your first action to influence the fate of the world's water challenges?
Good question. Yeah, I think education about water. I think it's important, really trying to understand and show how water is really important for everything, for not only for business and the economy, but also for everything we do. Yeah, I think investing in awareness and education can go a long way, because I think, and that's what I see from what I write, is when people have this haha moment, then it becomes quite clear. You see everything as in a new way, and how everything is dependent on water. So I think if you can support education and awareness, you can go a long way, because I think there's going to be a need to a shift in mentality and a shift in mindset too, because there's still a lot of people that don't want to see the problems at hand and say, we can ignore it a bit longer.
That's the thing of the full world of SaaS, where you can have your full funnel. The important thing is the activation metric, and there is one single activation metric, which is going to be exactly this aha moment you mentioned. And it's true that if we can activate that and find out what is this activation metric, so that everybody sees, like you break the halo effect, and you all of a sudden realize that
you break the fantasy.
That water is everything is an empty sentence, but the consequences of not water, or too much water, of too few, and
I think sooner or later this is going to happen. The goal is to make sure it happens soon enough.
Would you have someone to recommend me that I should definitely invite as soon as possible on that microphone?
Do you know Franck Barroso from Waterpreneur in Lausanne? It's a company based in Lausanne. They organize water conference, water events, where they bring a lot of new startups and financiers together, and also a lot of people connected to water together to see if they can match some stuff. So maybe try with them.
And if people want to follow up with you, let's say I'm an asset manager and all of a sudden I clicked because I listened to you during this full hour. Well, shall I?
I'm reachable on LinkedIn. As I said, I write a lot there on a daily basis, so I can be reached out there or through my website. So
as usual, the links would be in the episode notes.
For that.
Very good, Nicola. It's been a pleasure.
Thank you for the invitation.
And see
again.
you probably next year.
Yeah, I will be there. We can have a podcast outside next time.
That's
right.
That's
by the river. By the riverside.
I mean,
we can have a podcast near the water.
Yeah. Okay.
Or in the water if you.
So the next one is a Zurich Lake podcast.
Yeah.
Sounds good.
Yeah.
Thanks for listening to Don't Waste Water. This podcast was brought to you by GF Piping Systems. Loved this episode? Head over to Apple Podcasts to subscribe, rate, and leave a review. See you next time.